Hyperliquid has broke all-time highs, bullish in a bearish market, but will you get caught out chasing this green, or will you do what the smart money does and follow the TA? So Hyperliquid has clearly decoupled now from the rest of the market, moving beyond having some modest gains, while Bitcoin is a bit ambiguous, to going fully parabolic following this move from this lower support line, which we were previously talking about. We were looking for a retrace back to this zone with the 200 MA, and there's a little tap. And now we have broken through our current trading range, which was between around $49, $50 and $36, and we've now broken above all-time highs, which is essentially surpassing $60. And here we are at the time of recording, topping out just below $74. Now, obviously, there's going to be a lot of fervor around this asset this week, given this move. So the important thing to recognize is retail will be chasing this. They will be trying to capitalize on it, and some people will just simply hit buy here at $72, $73. They're going to hit buy on the presumption of more upside, but that makes no sense in the current market conditions. And even though, as we've said, Hyperliquid is going against the trend, it has decoupled from the rest of the market, and it does have a lot of upside potential. That doesn't change how we trade. That doesn't change what we want to see, because of course, if Bitcoin does start moving down, this will dampen this uptrend and push Hype back into the previous trading range below $60. So we need to be cautious here. We want to take advantage of Hyperliquid's bullish posture, and now this move into price discovery, which is going to attract a lot of new investors and a lot of new buyers into this asset, but we want to be coming in much lower down on a retrace. Now, obviously, if Hype heads higher from here, we're going to reevaluate this analysis, but here's the key. We've got this diagonal support, which we've just bounced off, and we've got this upper previous resistance now, presumably support at around $50, and we have the 200 MA on the daily offering confluence to this diagonal support as well, meaning that gravity at present is going to be pulling the price action down into this area like so. Now, you might be saying, well, hang on a minute, the textbook says that now we've broken above previous all-time highs, $60, which is a key definable resistance line. All we want to wait for is a bullish retest back down to 60, take my position there, and away we go. That would be what the textbook says. But let's also remind ourselves what is good practice. We're looking to enter with a lot of buyers, and this is essentially a resistance level defined by just a couple of interactions because it's so high up. This level here at around 50 has multiple touches for resistance, meaning that if we can flip it to support, it's going to be much stronger. More buyers are going to be coming in here than they are for the SR flip of this level at 60. So $10 lower at 50 all of a sudden becomes much more manageable, because if the price action comes back down here and you enter but it doesn't bounce, you're going to be left holding the baby as it heads back to get some more liquidity from these buyers here. Now, depending on when this of course occurs, we have multiple things to pay attention to. The price action needs to retest this area, so we're looking for that sort of confluence, and if the moving average comes up here, we want to see really a retest back down to around this level, something like that, approaching 50, and then we can look to take a position. That's the little pocket you want to get into, because then once the price action returns at this level, we'll either get the bounce and then we're quids in, or we'll have the price action move back into the trading range which we were in, because we've entered in this zone at 50 or just below. Within that zone, we're going to get Hype most likely moving around in this zone, giving us lots of opportunities to reposition or exit at no loss, even if things turn bearish, whereas that same can't be said if we chase this and we enter now at around 70. So we need to wait for that pullback, and currently this area between around $49 and $45, approaching this diagonal support and this previous resistance level at 50 is the best play. And of course, that is conditional, because if Hype continues up from here, we will reevaluate. But right now, strong bullish move, breaking all-time highs for Hype, but we need to wait for a pullback. So don't be retail, don't FOMO this, don't chase this, just wait for a pullback. And then potentially, now we've opened the door to this upper level with price discovery, an entrance down here could be quite fruitful for its next leg up. But that's Hype.